Alright, we are going with 16.1, work together. So first, the following list of accounts taken from Superior Corporation's adjusted trial balance. For each account that appears in the income statement, indicate if the account should appear in the operating revenue section, the cost merchandise section, the operating expense section, or if it is unrelated to normal operations, but should be reported on the income statement. For any accounts that do not appear on the income statement, select Not on Income Statement. So you see here we have cash, not, petty cash, not, accounts receivable, not. And this is all listed in 16.1 in your book. It would be pretty simple for you to go to that page and look at the income statement and know what's supposed to be there and what's not. Here we have merchandise inventories and cost of goods sold. We're just going to go with what is on it. So skipping down. We have sales. That is in the operating revenue section, along with sales discount, sales return and allowances, and then purchases, purchases discount, and purchases return and allowances. That all goes in the cost of merchandise sold. Moving on to this column, that all goes into the operating expenses. Lots of things in the operating expenses. And then the federal income tax, expense, and interest income all goes in the unrelated to normal operations. Okay, here on step 2, we have the calculations required to determine gross profit are as follows. Determine the order in which these calculations are made. We've got cost of merchandise sold, gross profit, net purchases, and net sales. You see what order those are in. And we went over this when I just talked about how we calculated everything. And then use the selection list to indicate the formulas for each calculation. The cost of merchandise sold, if you go back, this is on page, let me make sure I can get it. It's on page 477, cost of merchandise sold. And we have the beginning merchandise inventory plus the net purchases equals the total cost of merchandise available for sale. And then we subtract the ending merchandise inventory. Remember, this is January 1st, this is December 31st, and that gives us our cost of merchandise sold. Gross profit formula, that is also on page 477. We have gross profit is the net sales minus the cost of merchandise sold. Yep, again, in the book it says total operating revenue less cost of merchandise sold equals the gross profit. Okay, and the net purchases. Get where that one is. It is also on page 477. We have subtract the total contra accounts from purchases to calculate net purchases. Here it says, purchases minus purchases discount, minuses purchases returns and allowances equals your net purchases. And then the net sales formula. Finding this one. Sorry, don't want to lose it for you. Is the sales minus the sales discount. Alright, the net sales is found on page 475. Net sales is the amount of sales minus the sales discount and minus sales return and allowance. Alright, moving on now to the actual math. Sorry, I don't want the answers out there for you guys. Alright, it says the adjusted trial balance for Superior Corporation for the year ended December 31st of the current year can be found in question assets. Prepare the income statement including heading up to and including gross profit. Enter the year as 20 -- The beginning merchandise inventory amount is given. Valid values for text entry cells in the first column can be found in column 1 section list tabs of question assets. Colons are provided for you. I hope we can finish this in less than 10 minutes because my timer's going to run out. Corporation income statement for year ended Alright, first we do operating expenses. And as we said in the last part, that starts with sales. So we just have to find it. There we are. Sales. 505,897. And we have less sales discount of 1318. Sales returns and allowances 3153. Add those together and you get, I'm not going to bore you guys with my addition today. That gives us our net sales. Okay, we get 505 minus 471. Oh goodness, 501,425. Okay, I'm going off the book here. I have all the stuff I'm supposed to do. Cost of merchandise sold. Nope, no, that's what they said. No colons. Merchandise inventory. Remember, we start in January. And that was given right here at 87,000. Sorry, 86. Purchases, right there. Less purchases discount. $737. Purchases, returns, and allowances, right there. Add those together, and you get this, and then subtract those, and we get 201. Oops, I forgot to fill that in. Net purchases 201,947. Awesome. Moving on. Total cost of merchandise available for sale. Okay, this number is your 86,789 plus your 201 gives us 288 less merchandise inventory in December. Let's see what that was. Hold on. It took me a second, but I found it. I was looking for merchandise inventory in December. That's not it. Right here. Okay, merchandise inventory. And that goes right here. 81,017. Awesome. Okay. Cost of merchandise sold. We take the 288 minus the 81, 207. Okay, moving on. Gross profit. Okay, gross profit is your 501 minus your 207. Cool. Ooh, is that it? Yay! Okay, complete the income statement. I have 4.5 minutes before I'll have to do phase 2. So just so you know, I may have to put this in 2 videos. So after gross profit, we have operating expenses. Okay, these are all from up here. Okay, advertising expense. Looking for the expense, there they are. So I'm just going to pull each from up here, but I'm not going to go up and down. Okay, you know where to find them. 3744. Credit card expense, credit card fee expense, depreciation expense, office equipment, depreciation expense, store equipment, insurance expense, miscellaneous expense, payroll tax expense, rent expense, oops, big one, salary expense, supplies office expense, supplies expense store, uncollectible accounts expense, and utilities expense. Nope. 3972. Okay, we're going to add all those up. Total operating expenses. You guys are going to trust me on this one. Okay, that's all of those expenses added up. Then we're moving on to income from operations. Okay, we're at income from operations. We take our 293 and subtract our 201. We have 92,562.29. Other revenue. Interest income. Go up here and grab it, if we can find it quickly. $466.20. Net income before federal. Oops. Okay, add those together. Less federal income tax expense. Not sure if that one's up here or not. There it is, 19,879. And that gives us net income after federal income tax. Okay, subtract those. All done with that one. Okay, I'm going to have to do the last step on another video.